than all three of us combined of late. Pete McGuire in our Sydney CBD studio, but joining us via his trip to the OPEC shindig in the Viennese capital. Welcome into the show. Just put it into context, in the Austrian capital rather. You know, just put it into context, Pete. The latest meeting, you were over there. What were you observing?
Well, good afternoon, Carson. I think a couple of things really stuck in my mind. Not only the mechanics of the meeting as a whole, but more importantly, we had the Russian minister there, Novak, and he was totally engaged with the Saudis, certainly with the Nigerians, and at the press conference at the end, it really resonated deep and loud that the Russians are playing ball. Everyone's wanting to see you know, that compliance angle staying at that 95 to 100% range and continuing these cuts for the next 9 months, Carson. So truly, I was quite surprised by just the overall, I think, engagement by all of the members.
Meanwhile, crude production in the US has surged 10% since mid-2016.
Yeah.
Just to get an idea of that, you know, a surging whilst there's been a cessation in real terms from OPEC. I mean, it looks as if they're getting screwed, or am I missing something?
Well, the issue at hand is, as far as those US inventories, they're still above that 5-year average, and they're the concern as far as the Saudis and the OPEC. So they want to limit as far as moving forward over the next couple of months. Summer driving seasons here in the US, they're going to be naturally driving more over that period. Started traditionally yesterday with the Memorial long weekend. And then in turn, they'll cut their exports to the North America region. So that's how they're hoping to get that number down. Let's see what happens. I'm waiting for Mark to come up with a Baker Hughes, but I'll say that that's double the amount of what, as far as rigs, this time last year.
722 we got on Baker Hughes. Wow. And
but that's all in gas combined, right?
900 and...
Is it not?
No, that's just oil.
No. That's just oil?
Yeah.
Okay.
Oil.
So if you put the gas on top of that, it would be nice something.
Yeah. But what was interesting, Carson, on that was their lowest in, I think, over a year, because we only had 2 rigs increasing for that week. So that really puts a little bit of a handbrake, but the news is still onward and upward, so that's probably not a bad number.
And mate, they do 9.3 million barrels a day. That's just enormous, up from 8.5. So, you know, the quantum, a lot of people need to drive to try and get through all that oil. Plus, you know, their inventory that they are looking to sell as part of their budget management, it seems to be they want to sell half of that. They haven't decided when to sell it. But surely you must imagine there's a lid on the capacity for oil to go higher. Well, I think so. Unless you see geopolitical or you see some unknown, I really think it's going to have a handbrake around that 50 to 55 for WTI. And I think it'll oscillate between there. Naturally, the Saudis and the Russians and so on want to see a higher price than Venezuelans. But the issue at hand is, will the market absorb it as far as those inventories? So I think the next 6 to 9 months is going to be fascinating for that sector, and you know, plenty of volatility on the market.
Pete, it's Adam here. I've just been reading some articles today around the acceleration of electric vehicles, and that is an article in the SMH saying that they'll be driving oil towards a crash. Bloomberg New Energy Finance pinpoint 2028 as the year of reckoning, and Barclays Capital says that a couple of years later, by 2030.
Which isn't a long way away, Adam.
That's correct. So where do you see I guess the next decade of demand, and how's that going to sort of look? I know it's a little bit far out.
Well, you know, you've also got to take on consideration by 2040 we've got an extra 2.2 billion people inhabiting the planet. So yes, we'll go into that, you know, electricity and electric cars and so on. Then no doubt the uptake is going to be, you know, monstrous. And when you see those emerging markets, be it Asia or India or China, what happens there as far as the uptake? So yes, you could well be true, and you know, the likes of the Teslas and the hybrids are going to be, I think, sweeping changes, and that dawn of the 4th industrial revolution will certainly change behaviour. A lot cheaper to run a car versus a petrol engine. So yeah, I think it's going to be a fascinating context how that wraps around the oil industry and what impact that has to the likes of, say, you know, the Saudi Aramcos.
Just talk to me as well about the net long positions by the fundies, because this is a really interesting development. And if we want to see the herd and its psychology right here, right now, the difference between bets on a price rise and wages on a drop, rising 20% in the week ending May the 23rd. This is the CFTC data collation on all of this. So that is basically telling you what? I mean, the net long positions, when you see those increase some 20%, they are betting on...
the price increasing.
Yeah, this is right.
And not only that, but they were really right behind that big push-up over the last 2 weeks leading up into the OPEC meeting on Thursday. For the traders that out there, I mean, Thursday was just, an incredible day as far as volatility. It fell around about nearly 5%. Over that, 20-hour period, and then it bounced again on Friday around about 1.7, 1.8%. We all know the markets were shut yesterday. Yeah. But that really gave... So tonight's going to be an interesting night, Carson. The money managers and hedge funds, certainly, they're really gaining momentum, and it'll be interesting to see what the number is later this week or early next week. You've got non-farm payrolls, but that CFTC number for 30th of May.
Is there an inverse relationship, or is there any kind of a charting tool that gives you the Baker Hughes in kind of context alongside those net long positions as they adjust and ebb and flow week on week? Can we see a match? Can we sort of see some method in their madness? Well, some method in their madness, if you want to paraphrase it along those lines.
Well, I think that they're very conscious as far as what goes on with those US inventories. That's the big... They've been falling for 7 straight weeks, and that's the issue. If they continue to fall over the next 2 to 3 weeks and rise in consumption from the driving season, then really that's going to have a great impact. And then, of course, Saudis and the OPEC producers giving US less crude, that should bring down that inventory number. So, I think this month of June is going to be fascinating how it plays out, and you could well see, crude a couple of bucks stronger.
And Pete, is it also true that the sort of trading mentality of the people who are going long might actually be quite short? So if it rallies a couple of bucks, they'll turn it for a couple of dollars, and so there's lots of volatility in trading in terms of their positions. They don't necessarily hold it at 45 and hope to get it to 65. They might be turning 45 to 49 and sell at 50 back into 45.
Well, exactly right, Mark. I mean, that's just the fascination with trading, and that's observed across retail as well. Whereas, you're up $1 or $2, you've got leverage into the fact as far as futures or options or any form of derivative, and then they just exit the trade. But what's interesting is they can be up, $1 or $1.50. Then, if you've got 5 contracts, you sell 10, so you're naturally short 5. So the first 5 cancel them out, and then you're short 5, and it just makes it a hell of a... it doesn't stop 24 hours a day, 5 days a week.
And the same argument applies in Forex land.
Yeah.
Trading that story via that route. I'm just wondering, the call yesterday from Elliott was, if the music stops, we've got one hell of a bloodbath on markets. That is to say, the whole fiscal overture that Donald Trump composed. Headlines in the front of the Journal this morning to be waking up to for US markets: GOP bids to rewrite tax code falters. The boldest ideas for changing are either dead or on political life support. The Republic effort in Congress to reshape the tax system moving much more slowly than lawmakers and their allies in business had hoped. The clear winner so far, the status quo.
We'll have a look at US dollar, but more importantly, look at gold, 1271. I couldn't believe what's happened over the last, week and a bit. It's had a wonderful run up. There's analysts saying, Carson, you're going to see a 1300 handle. We're, only about $30 shy. So it's probably got the potential. US dollar weakness. What happens with non-farm payrolls? If they're slower this Friday, under 150,000, I think that's going to put a rocket to gold. And then you've got, Janet's situation. Where does she play in all of this? There's every chance you may only see one rate rise in the next 7 months. So it's, or you may not see any.
And then she moves on because, the president wants a different chair.
Absolutely. There's that, of course, can play into it.
Most cathartic experience on tour, Pete, what was it? I mean, I know they say what goes on in Vegas stays in Vegas, but I mean...
Well, I stopped off and I spent a couple of days in Mumbai, which was just fascinating. And, I'm just, spellbound by it. Young, the technology focused, just the sheer numbers, So I think that when I look at those sort of areas, they're the growth engines. It's going to be fascinating what Adam said earlier about electric vehicles. If they can penetrate the Indian market and really take on board that whole sector, I'm really quite excited for the energy space over the, the coming decade. It's going to be a fascinating industry.
And yet fund managers have been voting with their feet and exiting that market. They've said, look, the promise, and universally it would seem almost, to a fundie, they're panning Modi. They're saying he promised so much and he's let us down. He was all talk, and is all talk. That place is basically mired in the same rubbish it was 5 years ago.
Yeah, but growth in India's now outstripping the growth in China.
But there's a loyalty there, like there is in China, but perhaps more so to the status quo. And you come over there, like JP Morgan and Goldman Sachs have had to beat in retreat the path trod because
there's something about
those funds.
Those jurisdictions don't necessarily want the advice of those institutions.
That's it.
So I think in China, I know that we had businesses in China when I was at a previous company, and the problem is cultural, where they're saying, I don't really need for you to tell me what to do.
It's trust.
I will. My business, my country is going to evolve, and I don't need your help. We'll build it here. So the criticisms from JP Morgan, that would be falling on deaf ears.
Yeah, well, it's intriguing because they spent big to make the foray. Peter, have you got a view on that one? Just the wooing or otherwise of the West, and and the fund flows or otherwise that result.
I think you've still got, the storyline as far as the India and those emerging markets. There's no doubt that they'll capture more investment dollars moving forward from telecommunications, infrastructure, medical, you name it. They'll be across every sector. And they're just running, 20 or 30 years or 40 years behind China. So the gallop up's on. And if you look at the IMF numbers, they're normally pessimistic. They're very, very solid for India growth forward. So, I still believe that whole, subcontinent region is just, going to be quite alarming as far as, growth. It's going to be, again, a great story to be around.
Right, okay. Flying the fag. Thank you, as always, Pete. We'll talk to you soon. All the very